reflections, knowing we all look alike. That's what I see in my dreams.
From New York, I am Selwyn Collins, your host of CWS As It Is. Thank you for joining us this afternoon. One of the things I really love to do is have conversations with different people of various backgrounds. I believe that we are never more connected than when we share our stories, when we get together and have a conversation. My intent in starting CWS As It Is to create a virtual village square, because I believe that when people come together as a community and share ideas, it creates lots of opportunities. And I try to come here every Sunday afternoon and invite different people, and so that we can share different things that are happening in our lives, discuss various matters, whether it's politics, sciences, whatever. But I am going to bring on my first guest this afternoon, Mark McKenzie, who, well, let Mark tell you a little about himself. I just want to start the show without too much preamble. Mark, good afternoon. Welcome to CWS As It Is. How are you, my brother?
Good afternoon, Selwyn. Thank you. Thank you so much for having me on again. This is my second time on your program, and I'm truly delighted to be invited back. And I guess it tells me something about your program of wanting to connect people within our communities. Just by way of a background for your audience, I work primarily in the financial services sector, looking primarily at what we call the compliance programs in banks and other financial institutions, specifically with respect to anti-money laundering, anti-terrorist financing. I've been doing this now for about 15 years, and I see it as part of my purpose to try and make a positive contribution to mankind. When people have access to banking services, it makes their lives better. So just by way of a background, that's who I am.
Well, thank you, sir. And you're here this afternoon for a particular reason. We want to talk about derisking and what it means and how it affects the Caribbean, or it can affect the Caribbean and Africa and so on. And let's start by just telling us what is derisking.
I'm going to share with you for the few minutes that we have, Selwyn, what derisking is within the context of money laundering risk and terrorist financing risk. The banking business is really about risk and taking on risk. You know, the higher the risk, it's supposed to be the higher the return. And in the banking business, there are different types of risk: liquidity, credit risk, operational risk. Well, the risk that I'm focusing on is money laundering and terrorist financing risk. And when we speak of de-risking, what has happened over the last 2-3 years or so is that banks have, they're looking at their risk profile, and they're looking at the risk profile of their clients. And they're looking at the types of transactions that some of their clients are doing from an anti-money laundering and anti-terrorist financing perspective. And they're saying, well, these clients and these transactions are way, way too risky. So what we're going to do is that we're going to restrict, in some sense, taking on certain clients, or if we have them on board already, we're going to restrict the kind of activities that those clients can do. And then at the extreme end, banks are also, at the extreme end of de-risking, banks are also looking at certain clients and say, well, you are too risky. We don't want to provide banking services to you. That is the extreme case. So they're looking at certain customers. It could be from a particular country. It could be from a particular ethnic group. And they're saying, well, for anti-money laundering and anti-terrorist financing purposes, you're too risky. We're going to restrict your business, the business that you do with us, or we don't want to do business with you any at all.
So yeah, go ahead, Mark. Sorry.
So derisking is essentially the limiting or restricting of certain clients, certain activities that certain clients execute through banking, or the total culling or purging of certain clients from banking books.
But then that affects whole regions and like, for instance, the Caribbean and Africa. And well, let me back up a little bit. Let's take it a step at a time. How do they identify, or what are they using? Let's take in the context of terrorist financing and money laundering. How are they determining? How are they going about selecting which area and which region to de-risk? Is this fair? Well, you answer the question.
That is an excellent question. I think before we attempt to answer that question, let us look at why is it that they're doing it. All right. Well, there are a couple of reasons why they have decided that they need to purge their books of certain clients and certain economic sectors. And let us look at some of the economic sectors that have been affected. For example, banks in the US, they are cutting off their correspondent relationships with banks in the Caribbean, in the Cayman Islands, in Jamaica, as an example. Recently in the UK, Barclays announced that they are going to cease providing banking services to Jamaicans who are living in the UK who still maintain a Jamaican address. All right. Now, why is it that they're doing this? Well, the banks have put forward a number of reasons why they're doing this. One is since the banking crisis of 2008, 2009, a number of banks have faced truly hefty fines from regulators in the US and in Europe and other parts of the world for breaches in terms of anti-money laundering and anti-terrorist financing rules. So banks today are looking at fines that have been imposed on Standard Chartered, HSBC, other well-known cases that have been reported on. They are looking on those fines and they're saying, well, some of these risks that we're taking on, if we take it on and we are deemed to have breached the anti-money laundering and anti-terrorist financing rules, then we're going to face very hefty fines. So to avoid totally paying such hefty fines, they're just looking at certain class of clients and they're saying, well, we're going to restrict the banking services that you have access to, or in certain cases, we're no longer going to provide banking services to you. And an economic group that has been affected by this is what we call the remittance companies or the money services business. And as you know, immigrants around the world use money services business to send back funds to their home countries. So one reason they're doing it is fear of hefty fines. The other reason that they have argued that they are culling their books of so-called high-risk clients and businesses is they have basically argued that the anti-money laundering and anti-terrorist financing rules have more or less become too costly to implement, too draconian to manage, too complex. Their needs for greater clarity. So they are arguing that, you know what, it is costing us too much to take on a particular group of clienteles. And even if we do take them on, it is also costing us too much to manage the ongoing risk. So we can avoid that cost entirely by either restricting the banking services to certain clientele, or B, don't provide any banking services to certain groups.
I mean, pardon the irony here, but isn't there a risk of indiscriminate de-risking?
Again, that is indeed another excellent question. And we are going to come back as to how they go about identifying these clients. Well, one of the things that we think about is banks are required to provide banking services to the community in which they are located. All right. And, I think it's only fair and it's only just that all of us should have access to banking services. Well, a part of the argument that is being put forward is that de-risking is actually discriminatory.
Yes.
Right? Mm-hmm. Because in a large case, and if I take, I'm in Canada, in the group that is primarily affected in Canada would be new immigrants, for example. Right? Mm-hmm. But if you are a new immigrant, shouldn't you have access to banking services? All right. So it is indeed unfair. It is indeed unfair. And this is why it is such a pressing policy issue today.
Well, you're a banker. I mean, you're in the banking industry, and you've seen all sorts of ideas and policies emerge over the years. And this is a question I'm asking as a layperson: should managing the risk intelligently as an alternative to indiscriminate de-risking be a consideration? I mean, I'm asking this question, and it seems I'm assuming that they're not doing that. But let's go with that assumption that that's not what they're doing. Shouldn't managing the risk intelligently be an alternative to indiscriminate de-risking?
Absolutely, and that is gonna that takes us back to your previous question as to what criteria are being used. Mm-hmm. All right, so let's just look at it. The within the context of anti-money laundering and anti-terrorist financing, the Financial Action Task Force, the FATF, established certain standards, 40 standards, 40 recommendations for anti-money laundering, and they have some special recommendation for terrorist finance, and they also have recommendation with respect to corruption and economic sanctions as well. All right? So there are clear standards. Now, what the standards say is that banks can use a risk-based approach to manage and implement their anti-money laundering program. Well, since the issue of de-risking has surfaced, the FATF has said, look, it was never our intention that banks should use anti-money laundering rules as an excuse to discriminate or to stop providing banking services to certain groups of customers or economic sectors. In fact, even in the US, the regulators in the US have gone about to try and say, well, look, we have imposed some hefty fines on certain banks because there were clear breach of anti-money laundering rules. But that is not to say that we are taking a zero tolerance approach. Mm-hmm. All right? So we're not so within the FATF standards, within the Bank Secrecy Act and the US Patriot Act, and other anti-money laundering rules around the world, there are clear criteria in terms of when banks should use what we call a simplified due diligence process when taking on new clients, and when to use enhanced due diligence when taking on clients. There are also clear groups of transactions and clienteles that are deemed to be very high risk. So for example, the money services business or remittance business is considered a high risk because a lot of the time the transactions are cash-based transactions.
Hmm.
Right? So there are in fact criteria in terms of what is high risk and what is low risk. The reality though is that banks are saying, well, if we do take on some of these high risk, it is now too costly. The compliance risk is too high. If the regulators come in, they are going to impose hefty fines on us if they believe that we're in breach of the rules.
Do you think that perhaps these banks have found a clever way of twisting the arms of the regulatory bodies by implementing these draconian rules against risk or derisking in certain environments, um, obviously evoking a sort of geopolitical or global outcry against what they're doing, and in so doing, perhaps these regulatory bodies might revisit the rules and sort of dilute them a little bit.
It is conceivable. There is not. It's de-risking is a clear issue.
Mm.
What is absent is hardcore empirical data. For example, and I do not, are banks being truthful as to the reason they have decided they want to restrict banking services to certain clients? Are they being truthful when they say, well, we're going to cut banking services to certain groups? All right. So that's so you have that on the other hand. On the other hand, is it a reality that regulations and laws have become overtly complex? Right. In my view, the answer is somewhere in the middle.
So let's go to these are the causes. Let's go to the effect part of the scale. How are people in the Caribbean and low income parts of the world affected?
Well, the first thing is when a bank in the U.S. cut correspondent banking relationship with a bank in Africa or somewhere in the Caribbean, is that the banks in those countries may consider cutting banking services to the people that they are providing banking service, because they're basically saying the US banks and the banks in Europe and elsewhere are saying that they're too risky. All right. So what you get is what we call financial exclusion. And there's a whole host of study with respect to issues of financial exclusion. And in a lot of cases, it is the most vulnerable group of people who are excluded from the financial systems, or because the cost of transaction is so high, they cannot participate in the financial services sector. So they have to rely on informal means for banking services or for financial services. All right. So the first thing is it results in financial exclusion. It is also counterproductive to trade, because if banks in the Caribbean are unable to assist their business partners in their domestic economy to provide things like letter of credit and trade finance by virtue of having correspondent banking relationship with their trade with banks in the countries in which they are trading, then trade is going to be affected.
Investment.
And quite clearly, investment would be affected. And the same is we get to things like remittance services. The reality is there are over $400 and odd billion that are remitted each year from the major economies to countries like Mexico, countries in Africa, and countries in the Caribbean. All right. So remittance services will be affected because remittance companies, money services businesses are considered high risk.
Why is that?
Again, because money services is primarily a cash-based type business.
I see. So they want to be able to track
They,
everything, every
they,
transaction.
absolutely, absolutely, absolutely.
And the various financial systems, I mean, especially the Caribbean and Africa, but focusing on the Caribbean. The Caribbean is, I mean, they've had some change of governments, and the Caribbean is on its upswing, it seems, and there is this energy within the various diasporas to repatriate and give back to their country and so on. We're talking about investment in various kinds of investments. How does this affect the Caribbean financial systems?
Well, the reality is that the global financial system is interconnected. All right. So if and the reality is, if the banks in the Caribbean are unable to establish correspondent banking relationships with banks in the US and in Europe, because these countries are major trading partners
Yes.
for the region. So the reality is, if that network breaks down, then the whole notion of attracting financial investments for development purposes will also be affected. And we're talking about an area in which we want to promote economic development and economic growth.
Have you come up with some remedies for this situation? Have you thought of some possible remedies?
Absolutely, absolutely. I think there are a number of issues that we have to address, and one is globally and within the Caribbean region, a lot of progress has been made with respect to the implementation of anti-money laundering rules and anti-terrorist financing rules. Tremendous progress has been made on that front, but there's more work needs to be done. And what that means is that the banks in the US have to remain in dialogue with the regulators in the US. The banks in the Caribbean have to remain in dialogue with regulators in the Caribbean and policymakers. And at the same time, the US and countries in the Caribbean have to remain in dialogue, because we have to look at the anti-money laundering rules and we have to determine whether or not changes are required to make them, should I say, provide greater clarity if there are any ambiguities within the rules. So the first thing that is required is continued dialogue. The other thing that is required is that I think banks in the US and banks in the Caribbean have to continue to invest in technology that can allow them to do the kind of data mining and intelligence gathering that can give them a good sense as to risk, the money laundering and terrorist financing risk. Right? But at the same time, we acknowledge that investment in technology is tremendously costly.
Yes.
Right. So communication and dialogue is one, and re-examining the rules to make sure that aren't any ambiguities in the rule is another thing. And the other thing is investment in technology. But I think most importantly is both, and I speak of banks, not just banks in the US and banks in the Caribbean, but I speak of banks and governments around the world, have to recognize that there's still a group of people who are particularly vulnerable. And if this notion of de-risking continue, then we're going to make it so much harder for these people. So we have to be conscionable. We have to be conscionable, and we have to, as policymakers and as practitioners, we have to recognize that we have shall I say, a social obligation to ensure that the most vulnerable groups are not made to become even more vulnerable.
That brings me to a question. Are laws or policies or laws enacted with good intentions having unintended consequences?
It's yes. I think that this is a part of the case. I think the anti-money laundering, anti-terrorist financing rules and laws, they are necessary because it adds to the safety and soundness of our financial systems, and it adds to our security as well. Uh, however, uh, on the flip side, it impacts how, shall I say, the vulnerable groups are provided banking services. They are not as sophisticated as others. All right. So what you end up with is, a lot of time it is new immigrants that are affected. It is, the people who are already living in poverty that are affected.
Mm. Mm. Mark, you're Jamaican and have remitted to family in Jamaica. What are some of your concerns at the personal level?
I fear not being able to walk into a bank or a Western Union for that matter. I fear not being able to send my $50 or my $200 back to my aging dad in Jamaica. That's a real fear that I have, because the reality is that uh, I do have relatives there who rely on that occasional $50 or that occasional $100 that I can send. Right? And it's a part of why we have people migrate. It's for a better life. Right?
And what kind of long-term negative effects derisking can have in the Caribbean?
It's a whole notion of, it, in its extreme case, you could have a group of people who are no longer bankable. And by bankable, I mean they're unable to find banks that will provide them banking services.
Yeah.
So think about, as we talk about the empowerment of women in the region through with small businesses. What if those women are unable to access banking services?
Wow.
Have we helped their cause? We haven't. Right. So in its extreme form, it's, you could have a group of people who are unbankable. I'll tell you of an example that is taking a case that is taking place in the Cayman Islands right now. Today, the banks have decided not to provide banking services to remittance companies, and by virtue of that, Jamaicans who are expats working in the Cayman Islands are now having difficulty sending funds back to Jamaica.
So most of the banks in the Cayman Islands are foreign banks.
There's a large pool of foreign banks, but the reality is that both domestic and foreign banks are actually de-risking. And they're saying why they're de-risking is because of, for example, intense or draconian type anti-money laundering rules.
When did this when did this when this trend when well yeah let me ask it, when did this trend begin, and what actually drew your attention to it?
Well, I think it intensified. I would think in the last 2 or 3 years. I think the most prominent or reported upon cases would be with respect to the Somalians living in the UK. They were unable to send money back to Somalia because I mean, Somalia is an extreme case in terms of how the economy is organized and how the society is organized. And the banks in the UK basically just said, well, we're unable to determine where funds are going in Somalia, so we're not going to permit Somalians living in the UK to remit funds back to Somalia.
Wow.
So I think that was it. But then over the last year or so, it has intensified, and I'm telling you about real cases where in the UK, for example, Barclays has said in the UK that we are going to stop providing banking services to Jamaicans who are living in the UK who still maintain a Jamaican address.
I mean, I am still trying to wrap my mind around that, and logic is just failing me this afternoon. Um, I mean, I want to ask, can they? Well, obviously they can do it, and they didn't. But isn't there a public outcry?
Well, what I have done over the last 2 or 3 weeks is that I'm running a series on LinkedIn on the subject, because the issues, I think, start about 2-3 years ago, really, but it has intensified, and I think it is incumbent upon us to bring more awareness to this issue, because if it continues, then a lot more people, and I'm talking especially about the vulnerable class of people, are going to be affected. So I think you having this conversation with me is a welcome one, because you and I can help to spread some awareness amongst people within the Caribbean and on others in the US and other parts of North America, so that we can start to think seriously as to how we get around this issue, because I am of the view that this is one of the top priorities, or one of the top challenges that are confronting the banking sector and policymakers today.
Mark, well, time is up right now, but before I go, 2 statements, 2 questions in the chat room. One, Mark asked, what recourse does the Caribbean banks have?
Well, the first thing is, one response that we are getting from Caribbean Bank is when U.S. Bank cuts their relationship with Caribbean banks, the Caribbean banks are looking at their client base, and they are cutting their relationship with some of their client base. So, for example, they are telling the remittance companies that, your business is too risky for us.
Wow.
Because you're so risky, the U.S. banks don't want to provide banking services to us anymore. So we're going to